58, and right now, folks, we're going to jump over to our man, Basil Chapman. Folks, Basil's program, the Tiger Technicians Hour, every market day, 10 a.m. till 11 a.m. Eastern Time, and Basil's outstanding opening call newsletter, folks. You can check that out right on the front page of TFNN. You'll see the opening call by Basil Chapman. Hit that button. You can read all about it. You gain many webinars when you sign up for this, folks. They all are subscriber webinars that are free for subscribers. You can sign up for $149 for a month. You can sign up for $6.95 for 6 months or $11.95 for the year, saving more than 33%. And they all come with a 30-day money-back guarantee, folks. So you sign up, you get to try it for 30 days risk-free. You get to watch all the webinars, and then you decide whether you want to keep it, and it's perfect. Basil Chapman, good afternoon.
Hi, Tommy. How are you?
I'm doing great. How about yourself, man?
I'm doing well, thank you.
I appreciate you filling in for me when I was gone, Basil, and I was up there for one day in Boston and a quick weekend, but I got to enjoy some of that beautiful, cool Boston weather.
Good weather.
And, of course, it was a quick one, but back in 82-degree Florida weather right now, which is amazing. But I love that Boston weather, man. It was a great weekend.
Good.
So what are we looking at this market, Basil? We got some volatility, that's for sure. But what are you seeing in this market, please?
So, you mentioned volatility. One of the things that's been very intriguing is that every day for the last, 3, 4, 5 sessions, we've had a very good rally. And then the market, certainly the Dow's been very weak. Wait, did I forget something? I think I forgot something. Did I? Just a little ping. Let me just check.
If you could just repost your chart, and I heard it. You had your chart in there, but if you could just unpost it and post it one more time, I think it's just sometimes when posting it causes a problem, but I don't think it's pulling up right now. That's all.
Okay. All right, let me just do it. It takes 1 second. Oh, wait, have I lost that? Oh, did I
get it up
something?
there?
Hold on, I'll be right back. Meantime, let me just I'll talk while I'm saying that. Looking for this. Let me just find my...
And while we're waiting 5 seconds, folks, you can head over to the front page of TFNN and check out that opening call. As I mentioned, many great webinars that you gain access to as a subscriber of the opening call in there.
Okay, so I'm getting it up right now. Oh, it was there, and I just moved it around.
Yep, you just got to close your screen, Basil.
Okay, I'm getting off for it. There we go. Stop streaming. We'll do one more time.
You got it. Perfect.
There we go. Screen.
And we're coming back.
And go live. All right. So this is
fantastic. Go for it. We got you.
So I'm always looking at peak Ds in the Chapman wave. The fourth highest peak, the objective in a buy signal to upgrade to a buy mode is to get to at least the fourth highest peak. A is the first, B is the second, C is the third, fourth is D, and that's where other things can happen. So you saw it 48,431 on the 12th of November. We went to that peak D, pulled back sharply, and we've gone from 48,431 to the low today of 45,913. But what's really interesting is that the weekly chart went to, there's a technique that I use where I draw trend lines, and if it's a very narrow trend line, like a little mini channel, I call that the inside track repellent zone. You can see how it worked here in the Dow. It went above it, then it came down, and we had the support level, and it took it out. That's the daily chart. But look at this weekly chart. It went right to the edge, to that green top line, and now we've pulled back. And what do we have? A really good chance. It's only Tuesday. We've still got Friday to go, but I don't think we're going to get to an all-time high of 48,432, 1 point above. So I think we're making a potential peak D. Now, there are a lot of support levels, but the most important thing that I'm looking at here is that we've been talking about for some time that this is going to be a very choppy month. And one of the techniques that I had that I've used for so long, and I've used it again, is that I talk about earthquakes and aftershock. Sometimes the aftershock is less than the earthquake. Sometimes it's the same. Sometimes it's even higher. And I like to look at the market the same way, that I get internal highs, and then there's a residual high. And it could be higher, lower, but at that point, there's now weakness in the technicals, and it's the same thing at the bottom. You get an internal low, and then you get a residual low, and we've had that before. But I'd spoken about this when we were at 48,040 back on the 29th of October. I said, I think I've got an internal high. The 9-period moving average is still very strong above the 14. And I think there's going to be like an M-shaped pattern. I'm going to get a residual high. I'm not sure it hits this up-channel trend line, but if it does, I suspect that's where we get the turnaround, and that's exactly what we've got. So I use this for two reasons. I call it the dark news cloud cover, and each one of these little white rectangles represents a moment where it's either interest rates or it's something, but there's something that the market has either ignored, but now it's starting to take seriously, and you can see that it's taking it very seriously here, because for the first time, we've broken this up channel support line. So then, so we've been raising cash, we've got positions that we're still keeping core, very small position from much lower down. Robinhood's an example at 16 and went all the way to the 150s. We would like to enter trading positions in stocks that we own or ETFs that have really run to the upside very, very well, given us really good profits. We've taken a little bits off, and now we're waiting for this pullback to be starting to add. And we'll see what happens over the next. Now, I was asked this morning if I would do the symmetry that I call bar symmetry, where the number of bars on the left side from a high come down to a bottom, and then you expect the same number of bars to go up to test that high. And it could be the inverse, where you go from a low to a high and then back again. In this case, I was asked about the volatility index. Do I have something in the way of timing for the volatility index? And I said, yeah, I've got something, and I'm working on it, and here it is. So this is, I don't use the chap wave notation in the volatility index because it's a sentiment. It's when everyone, usually you make bottoms in synchronicity right at the bottom. All the charts come to a low, but tops kind of get spread out. So I've used this in terms of using the high that was made on the 17th of October, 28.99, where it was the regional banks. It was that moment that the volatility spiked up because of the regional banks. Everyone thought they were going to fail. Anyway, we survived that, and we came down. And what I've drawn in from the high that was the airline cuts and the government funding. See, funny how everything just disappears and we move on to the next thing. Right now, I've called it everything else. Anything that's not airlines or government funding, we're worried about it right now. And I think interest rates is a little bit there as well. So I've drawn the left side, right side price time match to the high of the 17th of October, to the peak of on the 7th of November at 22.72, and it comes out to the 28th of November. And today we just hit this Chapman wave inside track resistance. This is called the target resistance line, dashed line green, and it says that there's a chance. It doesn't give you the price, but it says that we should go towards the 28.99 high of the 17th of October, around about the 28th of October, which is interesting because as I was doing other work, it also suggested that there's a good chance that if we close weak, or NVIDIA, and then we've got an earnings report, and that's Wednesday night, NVIDIA, then Thursday we've got a government report. If we really close weak, there's a good chance that over the Thanksgiving vacation, everyone's starting to talk about the stock market and saying, well, what's going on? As it is, people say to me, what's happening with the stock market? More saying, how come it's gone so high? How did that happen? And I think there's a good chance we make some form. It might be just a low, but not the low, but sometime around about the 28th of November, after everyone's had their Thanksgiving and discussed the stock market and got worried. But we're looking to buy. We've had some really good gains, and we've got a list of stocks that we want to get. And we're just waiting, having patience to see when we make the trough with the volatility index skyrocketing.
A little 10 days, November 28th, 10 days of more volatility potential coming down the line. Right. I love it, Basil. Thanks for the actionable information as always. Thanks again for filling in the program last Thursday. I appreciate it. We look forward to the Tiger Technicians Hour tomorrow. Basil, have a great night.
Thank you very much, Tony.